Ladies and gentlemen, welcome back to Driven Wyld. Today we are talking about sales tax. So the tax code is one of the most complex part of any business, and knowing how this works in every state is vital, especially for gig workers looking to maximize their opportunities and use the gig economy as an income bridge as a long-term goal and not the goal. So in this video, we are talking about everything you must know about sales tax for gig workers and any person in business for themselves, really, how it actually is for all parties involved, and everything in between. But before we do that, let's go over a quick disclaimer. The content of this video does not contain and is never intended to be legal, business, financial, tax, or health advice of any kind. This video is for entertainment purposes only. It is advised that you conduct your own research and consult qualified professionals before applying anything you find online. I also want to be clear that everything that we're going to be going over is very market dependent, and what applies to me in my market may not apply to you. Also, thank you to GigTax for verifying this information and making this video possible. What is sales tax? Sales tax is a tax imposed on the sale of goods and services. It is typically a percentage of the purchase and is added to the final cost of the product or service. The rate of sales tax varies by location, with different states and localities having their own rates. In the United States, it isn't a federal tax, but rather a state and local tax. Sales tax revenue is used to fund various government programs and services such as education, transportation, and healthcare. Hence why it's such a market-to-market topic. It is also a form of indirect tax, meaning that it is a tax that is shifted onto others. This is also why some people set up virtual office spaces in states that don't have a sales tax, but more on that later. Sales tax refers to when it is added to the sales price of a good or service and then charged to the retail to the end consumer. The retail then remits the retail sales collected tax to the government. Tax jurisdictions only receive tax revenue when a sale is made to the end consumer. However, when buying supplies or materials that will be resold, businesses can issue resale certificates to sellers and are not liable for sales tax. State by state rules. As noted earlier, sales tax can be an important source of revenue for governments and the state and local levels. This is a point where it can be confusing for businesses, as local sales tax varies by state, and why this subject is such a market-to-market topic. In fact, there are 4 states, Delaware, Montana, New Hampshire, and Oregon, that do not levy a general state sales tax. Alaska used to be part of that list, but now implements a 1.82 sales tax. Still low, don't get me wrong, but I am sure they've had an absolute uproar about it. For the majority of states that do not apply sales tax, the sales tax rate can vary within state lines, and sometimes even outside of state lines if they have a virtual office and do most of their sales online. There are 38 states that allow local governments to impose their own general sales tax in addition to state general sales tax. This is why you'll hear a lot about city and county sales taxes on top of state taxes, or sometimes even both, and sometimes even no state sales tax but localized sales tax. Let's use California as an example. In Annapolis in Sonoma County, the tax rate is 8.5%. Meanwhile, Antelope in Sacramento County applies a 7.75% sales tax. And Ashland, which is in Alameda County, the tax rate jumps from 10.25% sales tax. Because it's California, why not add taxes everywhere? Note that items are considered essentials, such as groceries or utilities, have lower or no tax rate as a way to provide low income tax relief. Examples of items and goods that are commonly subject to sales tax include, and not limited to, furniture, restaurant food and drink, cosmetics and toiletries, computers, giftware, which I don't really know what that actually means. Giftware as opposed to any other ware or any other gifts. Toys, antiques, clothing, construction services, metered parking. Do not get me started on that. I will be here for too damn long. Haircuts and dry cleaning. Origin versus state. One of the key areas to know when it comes to sales tax is sourcing, which means the location in which the sale is taxed. Origin source sales are taxed where the seller is located, while destination source sales are taxed to the location where the buyer takes possession of the item sold. Whether you are selling services in person or products online, it is important to know whether you are located in an origin sourced state or a destination source state. Most states and Washington, D.C. are destination based. There are 2 origin based states: Arizona, California, which is a mixed sourcing state, as city, county, state taxes are all origin based, while district sales tax, supplementary local taxes are destination based, because why not make California even more challenging than it already is? Illinois, Mississippi, Missouri, New Mexico, Ohio, Pennsylvania, Tennessee, Texas, Utah, and Virginia. Calculating sales tax. When calculating sales tax on a taxable item, the cost of the item is multiplied by the tax rate to further illustrate. So let's go over this example really quick. In a state where the sales tax rate is 6%, the sales tax on a $10 book is 60 cents. The cost of the book to the consumer after tax is $10.60. The sales tax is the total amount paid for all goods and services subject to tax. This is known as an ad valorem tax, which is a tax based on the price of the item sold. Nexus. Nexus refers to the connection between a business or a state jurisdiction, further fueling the complex sales tax nexus, which is the tie between a seller and a state that requires sellers to connect and remit sales tax to the state. Physical presence and economic nexus are the most common forms of nexus. Physical presence nexus refers to the type of nexus that is established when a business has a physical presence in a state. This could be because they have a physical location in the state, such as an office or a warehouse, or because they have employees to make certain amount of sales within that state. In context of sales tax and use tax, physical presence nexus is one of the most common ways that a business can be subject to tax laws in a particular state. However, it's important to note that not all states require a physical presence to establish a nexus. There are other types of nexus that also apply. Physical presence nexus can also vary depending on the state, but usually physical nexus can be established by having, for instance, manufacturing facility, warehouse, affiliate, or an employee in a state. So make sure you consult with a qualified tax professional to make sure you're doing this by the book. An economic nexus, as the name suggests, is a sales tax nexus that is created when an economic activity occurs. Economic nexus refers to the type of nexus that is established based on a business's economic activity within a state rather than its physical presence. So even if a business does not have a physical location or employees in a state, they may still be required to collect and remit sales tax if they meet certain economic thresholds. These thresholds are typically based on the number of sales or transactions that a business has within a state over a certain period of time. Economic nexus has become increasingly common in recent years as more states have adopted laws requiring out-of-state business to collect and remit sales tax based on their economic activity within a state, which I think virtual offices contributed to, but that's besides the point. States usually have economic nexus thresholds in place in businesses that may be required to register in that state and collect sales tax if they exceed the economic nexus threshold. This is regardless of where the business, warehouses, or employees are located. Before Wayfair, nexus depended on a company's physical presence in a state. However, as a result of the rulings, if a business goods in any state, even if they do not have a physical presence in that state, economic nexus, and the transaction is online only, it may now be obligated to register in that state and collect sales tax. That means that with nexus decided by different thresholds in different jurisdictions, businesses must follow nexus laws across all 50 states, rather than only those which they have physical operations. For companies that do business digitally, indirect tax software tools are especially important important to ensure compliance with complex economic nexus laws and with states' various sales tax requirements, so make sure that you find the best software that is best suited for your personal needs. Ditching income tax for sales tax. Sales tax is the largest revenue source, and people spending anywhere from a sixth to 2/3 of their income on said taxed items. Some economists who favor sales tax say that taxing consumption is less economically distortive and more conductive to growth than taxing income. That said, states wishing to transition from income to consumption taxation will eventually need to create solution with the long-standing issues facing sustainability of the state sales tax, which have not kept pace with changes in the economy and have gradually eroded over time. So there is a trade-off to both sides. Reselling and drop shipping. Sales tax must still be remitted on drop shipping sales, but it isn't typically collected at every stage of transaction. In most cases, the customer pays sales tax to the seller. The seller remits the sales tax to the state and provides a resale exemption certificate to the supplier. The supplier maintains a certificate of proof of valid exemption. But as with all things sales tax, there are different liability scenarios. Sometimes the supplier is responsible for the sales tax, or the customer is on the hook for the use tax. The correct scenario for any transaction depends on multiple factors, including locations of all three parties, the taxability on goods, and where the seller and supplier have nexus, or an obligation to collect sales tax. It is highly recommended to consult your specific tax obligations with a qualified tax professional. Subscription services. No matter what the Candace is, subscription charges should be treated as any other one-time charge for sales tax purposes. While it is a recurring charge, you don't have any additional sales tax. However, understanding details such as product taxability and economic nexus thresholds will be key to managing tax compliance for your subscription business. That means you will need to know where you have tax obligations and understand the product taxability. And that said, this is a conversation to have with a qualified tax professional on your specific business, and that is where GigTax is here to help. As someone who has ventured into self-employment via food delivery apps, the income is promising. That said, you are also faced with challenges in navigating taxes as a self-employed person and transforming your gig into a sustainable business. GigTax was founded by Joseph Mayo, a seasoned gig worker with over 7,000 deliveries across 7 platforms since 2020, and they understand the challenges of freelancers, rideshare drivers, couriers, and online sellers, gig workers of all kinds. Their #1 online tax preparation service is designed to maximize your tax savings and save you time, energy, and money. Enjoy exclusive discounts on tax prep services, as well as a range of additional benefits such as electronic filing, strategy sessions, year-round direct access to tax pros and financial partners, client app and portal, tax planning services, and quarterly tax reviews. All absolutely free and incredibly valued benefits when filing with GigTax. Book your free strategy session today at gigtaxservice.com/drivenwyld and enter the code WILD, all lowercase, to access your special offering. Let GigTax simplify, educate, and support you on your tax journey, whether you're a gig worker making some extra money or becoming a successful entrepreneur leading an incredible lifestyle. Visit GigTax using the link in the description below and get started with saving the money you made and making even more along the way. Thank you so much for watching. I really appreciate it. As always, make sure to hit the like button, subscribe if you're new, and I'll see you guys next time. Peace.